This is Short Hammer. It is the 9th of March 2020, and this is Trading Zones. Been sort of off for about a week or so. Been a little bit under the weather, a little bit of traveling with the family, but back now. Market is insane. Been doing a little bit of light trading the last week. Levels are still working. So what we want to watch for, I'm looking at the SPY. The futures did gap down and they did halt the futures. I think we had a 4 or 5% move and they hit those breaks. So we'll see when that opens back up. But what we should be looking for is that we should open up around this 280 area. Let me drag this up, open this up a little bit. Right around this 280, 80.93 area. I think the futures are at 28.29 roughly, but I'll be watching this 280.93. I'll see if when we open, we see buyers step in and give us a slight pop up to that 286 area. If we see that, we'll be looking to fade that back down to the 280.93, where I'll exit most of the position and leave the rest at break even. If we don't pop and we open around this 280.93 and begin to sell, I would not chase it. I wait for a back test into the 280.90s, look for failure back down, and then I would probably fade that and have my stop above the 280.93. Going to be really careful, guys, because there is a lot of news swirling, not just about the coronavirus and not just about global supply chains, but central banks are panicking and they're slashing interest rates, and there's a lot of stimulus money being talked about and being considered to sort of, say, hold these markets up. But so far, investors are not interested. They see value at lower levels. So what that tells you is just be careful jumping in, thinking that we found the bottom. No one really knows where the bottom is. And no one knows at what point the market will look at the coronavirus news and say, hey, we're going to start buying this news. So rather than selling, we're going to begin buying because we feel that at these levels, wherever those levels may be, there's value in buying and holding from this point, because we expect within whatever that time horizon is for the market to recover. So we'll see when that happens. Some people thought it was Friday, but based on what's happened in the futures, that's not the case. So we'll see where the market shakes out, but protect yourself. Watch the 280.93, 281-ish area at the open Monday. If there's no new news and we continue to sell, we should be roughly around that area gap down. Keep your eye on I would say the Fed, because they are probably going to cut interest rates, and there may be a discussion about stimulus, and we'll see how the market responds to that. Let's move over to Amazon, and this is all on the daily chart. Now, we were looking at Amazon roughly around this 1850. That was a good dip buy area, and we like that area to dip buy. But on Amazon, what we have to be careful of now is, because the futures have gapped down, will Amazon follow? Will Amazon also gap down? If that is the case, you really want to watch the 1830s and the 1740s. If you remember the earnings back in, I want to say July, we gapped down right around those 1740 areas, and we had a ceiling around the 1830s, and we were unable to get above the 1830s for quite some time. Look at this, all this this span from, you could say, roughly August until December, we were struggling to get above those 1830s. So if we get back into that channel, I will be careful and see if buyers step in around 1830s, if we gap down through that, where we will be. And if we sell, watch buyers step in around the 1740s. So I'm keeping an eye on those two levels on Amazon. If we receive news before the open that bounces this market, then maybe the buying will be above the 1850s. Keep your eye on the 1885s and potentially the 1916s. We'll see how this plays out in the market. But currently, we close around the 1901s or 1900s. So we'd have to sell through the 1885s, which will probably be below on the gap down. Then watch the 1850s. Then watch the 1830s. Then keep your eye on the 1740s. 1805, 1798, and 1792 were also some areas. But I think if we're just going to be selling, then you need to watch those 1830s and those 1750s because 1740s, because those areas are more significant. Do I believe Amazon has more value to the upside? Yes. Amazon's probably making a bunch of money right now with people in the house ordering things from Amazon, not just the regular things, electronics, couches, and things of that nature. But Amazon also owns Whole Foods, if you remember, and they made a significant investment into their delivery service and purchased fleets of delivery vehicles to be able to control their supply chain as far as delivering direct to consumer. So keep an eye on Amazon, and even as it begins to sell, or if it continues to sell, look for value entries. I'm sure a lot of people that trade Amazon, invest in the Amazon, will be looking for levels to begin to scale in, not to just jump in thousands of shares, but to slowly scale in and waiting for a reversal to the upside as it begins, as we dip, especially if we see the 1830s and 1740s. Those will be some trigger points that I'm sure that investors will keep an eye on to look for the buyers to begin to slowly scale in if we get down there. Next up is Netflix. Netflix, we were saying above the 384. Let's zoom this out. Above the 384, if we can find buyers and get either news or some sort of momentum, it could have a Tesla-esque move to the upside. That didn't happen. What we see here is above the 384, the buyers just weren't motivated and the air got thin. And we see all these rejection candles. And look at these wicks. And just a pull back to the downside. Now, we could blame the coronavirus for this, but it's funny how this happens right at this area, this 384 area, which has been a brick wall and been a supply zone since 2018. We'll see how this plays out, but we do have a trend line that we have in place from September that says that we can expect at some time, maybe it'll be tomorrow, maybe it'll be this week, for Netflix to pull back even more, potentially into that 343 area. So I'll be keeping an eye on Netflix between the 335 and 343 area. Not saying that I won't trade between there, but if I'm looking for a long position on Netflix, I'll be watching the 343 to 335. And if we hit that area and we sell hard, I'll be looking for a back test to fade if we don't find buyers or demand in that area. So we'll see how that shakes out. Netflix did close roughly around the 368-ish area. And so we're between the 370.94 and the 361 supply demand levels. So we'll see if we open up gap down below the 361s, and if we see any buying to get us back above that, maybe a back to the 370s, or we'll see a back to the 361s, and we'll see what the sellers and buyers decide to do from there. If they decide to sell us and we roll, next stop is the 340s, 343-ish to be exact. And then we may see a test of this longer term trend line here. So we'll see how that shakes out, but that's what we're watching. That's what we're keeping our eye on to see if will Netflix sell, because definitely the buyers didn't give us any warm fuzzies above the 384s. All we did was sell. So we'll see how this shakes out. Do we test this trend line And do buyers see that as a place that they want to step in? 343s, 335s do look good for a potential buy area, but the overall market, you have to keep an eye on that, because if the market is still weak and we haven't entered the quote unquote buy the dip level, then any one of these levels could sell through and drop to the next level. So be careful, watch for the reversal and the change in sentiment, and then you can get in. If you're going to scalp, it may not be a bad place to scalp if we sort of extend into this area with some heavy selling, and maybe we'll see a bounce from that point. But to get a long-term position, or to get in scale into this significantly, I would be careful until you see an overall market reversal or a sentiment change, or something other than just the technicals here on Netflix to say, hey, I'm going to go heavy into Netflix because I expect it to bounce. Wait for the market. The market will tell you when it's time. Let's see. But if you're scalping, take your scalps. Just my opinion. Next up, we have NVIDIA. And NVIDIA was gone up in the 313s and higher. And the coronavirus news hits, and we've just been selling. Now, NVIDIA almost touched our trend line, or tapped our trend line. Didn't quite make it there. We'll see if we get it on this next downward push. But the trend line is right around that 242 area. We'll see if we get there. We do have a few speed bumps in between, but based on the futures gapping down, I am expecting a gap down in the market. So we may test the 242s, and that is a good area to potentially look for a reversal. So we'll see if that happens. If the market, for some strange reason, opens up at the same level where we close based on news or stimulus packages or whatever it could be, the levels to watch, you see clearly, are the 274s, the 266.80s, the 260s, then the 257s are the areas to watch. Below that, you see the 252s and the 247s are areas that we can drop to if we're selling hard. So keep your eye on NVIDIA, and watch these levels for either the buyers or the sellers to look to take control, grab the wheel, or at least battle and put up a fight. And a lot of times, if we're selling hard, these areas, these supply demand zones, are good places to cover your shorts, because there are places where the buyers may expect some sort of reaction or reversal from those points. Next up, we have Facebook. And Facebook, it's right below the 179.60s. Actually, no, right above the 179.60s. Looking at it here. If we gap down, watch the 173.11s. If we're looking at candle structure, there's a much stronger demand area right around the 161.30s. We'll see if that happens, if we sort of drop down to those 161s in this area, and if buyers step in. There is a potential for buyers to step in right around this 173.11s. You can see this little plateau here. Keep your eye on Facebook. We'll see what the buyers and sellers tell us, but these are some of the levels to watch out for: the 161s, the 173s, the 179.60s, and the 184s. ABBV, they did have pretty good earnings. They were running up into earnings, then gapped. We have seen some selling since the coronavirus news came out. They actually were pulling back before, and it looks as if the buyers were ready to step in and give us another leg through the top, and maybe may have been on the way to seeing some higher highs, but that did not happen. In essence, the coronavirus news came out, and this ticker has been selling. Buyers did step in around the 81.60s. We see the previous dip area from this push up was roughly about the 81.60s, and we bounced there again. If we roll, will we sell through the 84.30s and the 81.60s? That's something to watch for on ABBV. Or if we hang here near the 88.70s, will the buyers step in and give us a run up into the 92.90s? Watch, just all these different companies coming out with news, just be based on the fear from the community and the government, and different companies receiving grants and investments to be able to help out with the coronavirus. Just keep an eye on some of these different medical companies to see how they may potentially benefit from whatever grant money or uh, investment money that may be coming from the government to sort of speed along or expedite a cure for the coronavirus. But just watching these levels on ABBV, we'll see how that shakes out. These types of tickers that beat on earnings are tickers that you want to keep an eye on, that after the selling has completed, where investors may see it as a value buy, expecting the whatever the guidance was to hold up. But also, what you want to be aware of is quite a few of these companies may be adjusting their guidance, even if they beat and guided up. They may be adjusting their guidance because the interruption in the global supply chain, interruption in so many different industries where people are not out and about, not purchasing from these companies. You have to watch to see if they revise their guidance down. And quite a few companies probably will end up revising their guidance down based on the fallout from the coronavirus. Let's move on. Next up, we have Intel. Now, this 58.80s, just based on this candle structure, for me would have been a great dip buy area. But as you see, we gapped through that. We back tested, and the sellers did step in, and we're headed back to the downside. Watch the 53.58s to see if buyers step in. If we gap below that, and I don't have these lines drawn, but the next area I would be watching is the 40. Let's see what we've got here. Probably right around the 49s. And below the 49s, I'll be watching the 46s on Intel. We'll see how Intel reacts. The company itself has said that they don't see any impact to their business based on the coronavirus. We'll see how true that is, but that's the public statement that they're going with at this time. So we'll see how that shakes, but I'll be watching these different levels, the 53.50s, the 55.70s, the 49s, and the 46s on Intel to see if the buyers change their sentiment and we head back to the upside. So we'll see. Next up, we have Microsoft. So Microsoft closed around 161. We're expecting a slight drawdown based on the dip in the futures. So maybe we open up below 160 or in right above this 156 area. If buyers don't step in here, the next stop is 152.20s, and below that 147.50s. This area at the 141s is also a strong plateau. Look at the amount of time that we spent trying to get through that level. So I'll be watching Microsoft. If we open up below the 156.50s, watch for a pop and fade setup, but watch for buyers at the 152, because last time when we were selling, that's the level where the buyer stepped in, right around that 152.20 area. Square, and let's see, where are we? Pulling back here. So above the 69.80s was a good buy area. You can see the candle structure here, and just a lot going on around that area. And it did bounce, and we are above the 73 or the 72.90s. We'll see if we sell back off and if we hold above the 69.80s. If we are below the 69.80s, keep an eye on the 66.60s as the next stop, and one leg below that is the 64.13s. But if the buyers step in, we could see a pop on Square. Watching these levels. but keep an eye on these levels to see if they hold. Etsy does not seem to have been as heavily impacted by the coronaviruses as the companies. And we see a slight pullback here. We are right above the 5970s. We'll see if buyers hold this bad boy up or if we roll. If we roll, watch the 5690s, then the 5560s. Right here in the 52s, it's like a natural area to rest if it continues to pull back. But if it does not, watch for the buyers and watch the 5970s to hold for like into the 6518s. Yep, those are levels that I like on Etsy. And it is a good sign that it appears to be a little bit stronger than the rest of the market. Nice little uptrend here. So Etsy maybe you want to keep an eye on. Next up is GOOS. We had a dip buy area on GOOS right around this 30-40. And what I want to watch for now on GOOS, it does have significant China exposure. So personally, I do believe we're going to retest this 2610 at some point, but I am not ready to jump in front of a falling knife quite yet on a company like GOOS. 2660. Yep, it's going to probably end up backtesting these different areas. We have to wait for the catalyst to get us up there. I am going to wait. We're here, so we can drop all the way down into the 20 whole dollar before there's any significant change. Okay, but that's what I'm watching for on Canada Goose. If we buy back above the 2610s, I'll be long into 3040s. If we fail that level, then I may be looking for a short position down through the 24s or 22s. That's interesting. But the 20 whole dollar definitely looks like a stronger level than these other levels. Dollar Tree, nice selling here. This was an area that we wanted to buy, and he pushes into this area to the downside. I wanted to buy, but this did roll over slightly. We held above the 7280s. I will be looking to see what we do above the 7940s. If we open flat, then there is a potential for the buyers to squeeze us to the upside. If we open up gap down, there's a potential to make a lower low. So keep an eye on this. The next stop, if we sell, is 72.80. If we buy, it's 84.15. But I do like Dollar Tree. And end up back on the SPY. So if you liked that video, don't hesitate to tap the like button. And if you'd like to receive more content like this, subscribe to our channel, Power of Pivots, where you can look forward to receiving more videos like this, but also videos from Elisa as she shows you how she utilizes her Power of Pivot script to find great entries and exits intraday, but also really, really good swing plays. Thank you for your time and enjoy your trading week.